Hello everyone and welcome to my channel. If you are studying financial management and need help preparing for exams, this channel is for you. Please like, subscribe and share this video with other students.
Today's topic is statement of comprehensive income. For N4 and N5, step-by-step explanation and practical examples. For N6 is the same format but adding few things which will be done in the next video. I'll be using November 2021 N4 question paper. On question 3, we are given our trial balance and then also our additional information. The most important thing to know when preparing income statement is the format. And then also you need to know that the income statement tells us how revenue turns into net profit. It's split into gross profit and net profit sections. These are things that makes our income statement. Sales minus cost of sales, it gives us gross profit, plus other income minus our expenses, and then it gives us net profit or net loss. The first thing that we will have is sales, known as turnover. We'll have our cost of sales and we'll have our gross profit. But now I cannot just write gross profit because we don't know if ever cost of sales is given or we need to calculate our cost of sales. So the information says, the following information was extracted from the pre-adjustment trial balance of ABC traders on 30 June 2021. Required. Prepare the statement of comprehensive income for the year ended 30 June 2021. Pre-adjustment trial balance of ABC traders 30 June 2021 goes like this. Things that we need to know first. Sales or turnover, we minus our sales return, and also we minus discount granted. But then now settlement for discount granted and also discount granted, it's two different things, guys. Hence, sometimes in some statement of comprehensive income, you will see that it's been minused on sales and then sometimes it's been added in our expenses. Because the moment they say settlement, it is directly involved in our sales. But the moment it says discount granted, it's not linked into our sales. So it affects other expenses. It is the same as discount received. Discount received affects our other income. But the moment they say settlement discount received, it affects our purchases. We have turnover, open bracket, which is 248,088. And then we have sales returns, guys, minus sales returns. We always minus sales returns, 888. And then, guys, we have discount allowed. Discount allowed, guys, we cannot minus it from our sales because it was not directly linked to our specific sales. But the moment if they said settlement discount allowed, then yeah, we would minus it from our sales. But now the moment they say discount allowed or discount granted, it affects other expenses. So this is our sales. We're done. We get 247,200. Cost of sales. We don't have cost of sales, guys. We need to know the format if cost of sales are not given. Is purchases plus carriage on purchases plus import duties or tariffs plus opening stock or inventory minus closing stock or inventory. So guys, we have our purchases. It's so easy whenever you use your highlighter because you will see what adjustment you have captured or not. Already used our sales. We've already used our sales returns. Carriage on purchases, guys, is 1,020, which is 1,020. Import duties is 948. Opening stock, you take it from the trial balance. Trading inventory 1st July 2020 is 71,328 minus closing stock. It's given in our additional information. According to physical stock count, the following were still on hand on 30 June 2021, meaning this is our closing stock, 29,400. Purchases return is 792. And then also in our additional information, guys, the owner took trading inventory at cost price of 288 for personal use, which is those are drawings. No entry has been made in the books, meaning it was not recorded. We need to record it. Minus 288. Then you close your brackets. This is how we treat our cost of sales. And then we get our gross profit equals to sales minus cost of sales. It gives us our gross profit. And then we have other income. And then we check from our trial balance, credit losses, that's an expense. Credit losses recovered, guys, that's an income. Meaning bad debts that were written off, they came back saying now we are able to pay whatever debt that we have with you guys. So they become credit losses recovered. Credit losses recovered is 624. And then we have stationery, we have discount received. Discount received whenever we were purchasing or whatever transaction we were doing to our suppliers, we got a discount. And then we record it under other income, discount received. We don't minus it on our purchases because it's not settlement discount received. Is a discount received, which is a general term that we use whenever we receive a discount. Discount received 585. Carriage on purchases, we've already recorded. Salaries and wages, that's expense. Discount allowed, expense because we are giving discount to our customers. Raising taxes, expense. Rent received. Rent received, guys, is income because we are receiving rent. We are not paying rent. Sometimes can say rent paid. That's an expense because we are paying rent. But in this scenario, we are receiving rent. So is an income for 6,240. But then we need to check if ever we have a transaction based on rent or we just record that amount. Adjustment number 2 says the rent was paid for 13 months. If it was paid for 13 months, our financial year contains 12 months. So we have a deferred income or income received in advance, which is 6,240. We divide it by 13 months because this amount is for 13 months. We get 480. 480 times 12. But then here you open your brackets. Since we had that 6,240, you minus 480. So the moment you say 6,240 minus 480, you get your 12 months rent received. So we are done with our rent. You highlight, and also we're done with this transaction number 2. You highlight to make things easy for you. Adjustment number 4 says write an amount of 218 off from debtors as irrecoverable, meaning we have bad debts of 218 rand. Take note of adjustment number 4 and create provision for discount allowed. Guys, this is another statement. This is another adjustment. Now we need to calculate allowance for credit losses. It's the same as provision for bad debts. Is the money that the business puts away just in case we have debtors that are irrecoverable, meaning we have bad debts. Whenever we are calculating provision for bad debts, we take debtors control. It's known as trade receivables. Trade receivables, it's the same as debtors control. We take trade receivables, which is debtors control, 21,518. We minus our bad debts, we minus our credit losses, but then you don't minus the credit losses that are on the trial balance, but you minus the bad debts or credit losses that are on the adjustment. Adjustment number 4 says that write an amount of 218 off from debtors as meaning this is our bad debts minus our current bad debts, which is 218, and then you get your amount. The amount that you get, you times it with the percentage given, you get 1,065. And then we go to our pre-adjustment and check allowance for credit losses. Is the money that the business puts away just in case debtors don't pay us on time or they don't pay us at all. Is 1,968. So the amount of bad debts that they did not pay us is 1,065 rand, meaning is an income because the amount that we put away for our credit losses is 1,968. Only money is to lose 1,065 rand. All right, allowance for credit losses. Open your brackets. You take the amount that is in the trial balance, which is 1,968, and then you minus the amount that you calculated, 1,065 rand. We get the surplus, we get the income of 903 rand, meaning we still have 903 rand. We are done with our other incomes so far. We don't have other incomes. You add all of this. So gross profit plus other income, you get your gross income. And then we have other expense or expenditure. We go back to our trial balance, credit losses. We have 2,016 rand, and then plus we have our bad debts of 218 rand. Close your bracket. 2,016 rand plus 218, we get 2,234. We have that adjustment that says take note of adjustment number 4 and create a provision for discount allowed of 2%. That's an expense. Provision for discount allowed, we need to create it, which is we are doing it. We already calculated our allowance for credit losses, provision for bad debts, and then now we need to create provision for discount. So we had 21,518 from our trade receivables or debtors control, and then we minused our bad debts. We times by our 5%, and then we got our provision for bad debts. You will take your debtors control, which is trade receivables minus bad debts, equals to, and then you will minus it by total amount you got for provision for bad debts. The amount that you get, you times it by 2%. You get your provision for discount allowed, which is 405 rand. How did you get 405? We took 21,300, which is, it was the amount for debtors control, trade receivables minus our current bad debts. We got 21,300, and then you minus it by the amount you got from allowance for credit losses, which is that 5% you have calculated for credit losses. It was 1,065 rand. You minus it, 1,065. You close your bracket, and then you get your 2,235. We need 2% for discount allowed, times 2%, and then you get your 405, which is your discount. The second amount is stationery. We have stationery, guys. Stationery is 1,176. According to the physical stock count, the following were still on hand, meaning stationery 288. So minus 288. You close your bracket, and then it gives us 888. We have salaries and wages. You need to check if you have any adjustment that talks about salaries and wages. No, these are rates and taxes, depreciation, interest and loan. So 68,640. And then we have discount allowed, which is 828. We have rates and taxes, open bracket, because we have an adjustment that talks about the rates and taxes, 7,176. We go down. Adjustment number 6. Rates and taxes include a payment of 3,180, which was paid in respect of the municipal financial year, which ended on 31st December 2020. Our year started in 1st July 2020. So July, August, September, October, November, December, and then we have Jan 2021 up until July, right? And then, guys, here they tell us that the year ended in 31st December 2020, meaning it started in Jan 2020. Feb, March, April, May, June, July 2020, still up until December. From January up until June is 6 months. Then from July till December, it's another 6 months. So January to June, we need to exclude January 2020 to June because it doesn't affect our financial year. But starting from July 2020 to December 2020, it affects our financial year because we started in July 2020 up until June 2021. This amount will divide it into two. The first 6 months, it did not affect us. It's the 6 months that we must exclude. But from July to December 2020, it affects our financial year. It affects our current financial year, which is July 2020 up until December 2020. This amount divided by 2, or you can use it the long way method. This amount divided by 12, you get your amount, you get your total amount paid monthly, and then you times it by 6, which is the 6 months that affects our current year. And then you get your 1,590. This 1,590, we minus it here. Minus 1,590. You close your open bracket. The total amount of raising taxes we must pay is 5,586. We are done with our adjustment number 6. This is how we treat adjustment number 6. But if ever the end of the year financial year was not affecting our financial year, we were going to minus the whole amount. If maybe they say the financial year ended in December 2019, adjustment number 7 talks about depreciation, guys. We need to know we have 2 formats of depreciation. Is a diminishing balance method and also straight line method. Diminishing balance method, it's whereby you minus your accumulated depreciation. But the straight line method, you don't minus accumulated depreciation. They say vehicle at 20% per annum according to the diminishing balance method. Equipment at 15% per annum according to the straight line method. Equipment to the value of 2,400 was bought on 1st April 2021. Our year started in July 2020. July, August, September, October, November, December, Jan, Feb, March, April, May, June. We have vehicle. We go to our trial balance. We need to get land and building equipment cost, vehicle at cost. We take this amount, vehicle at cost, 54,960. And then also we have equipment. Equipment at cost is 31,200. This is the amount that we take from our trial balance, their cost. Since they told us vehicle, we use diminishing balance method. We will minus accumulated depreciation on vehicle, guys. Accumulated depreciation on vehicle, which is 10,680. Calculating vehicle depreciation. We'll take the vehicle cost, which is this amount, 54,960. We minus, since we are using diminishing balance method, it is a must, guys, to minus accumulated depreciation. Our accumulated depreciation we were given is 10,608 minus accumulated depreciation. The amount that you get, you times it, times 20%. And then you will get your depreciation. Let's round it to the nearest. You get your depreciation. This amount is our depreciation, guys, for vehicle. And then we have equipment at cost. We have equipment at cost, which is 31,200. 31,200, they say it needs to be calculated on the straight line method. Equipment on the straight line method. But you need to bear in mind, guys, we have an addition of equipment which was bought on the 1st of April 2021. It was bought here in this month. We'll say EQU, which is equipment. So from this amount we need to minus that amount, 2,400. We need to minus the equipment that was bought, which is so we need to, in the equipment cost, we need to minus the equipment that was purchased during the year, which is 2,400, and then we get 28,800. Our 28,000 times 15%, we get 4,320. This is our depreciation from the old equipment that we were using. We have the new equipment that we need to calculate, which is, I would say, new. It is 2,400, sorry, 2,400. This equipment, it was bought on 1st April 2021. So is April, 1st April, May, June. It's 3 months. But if ever they told us the equipment was bought on 30 April, you were not going to include April, but you were going to start counting from May, because it was bought on the month end of April. It started to operate in our business in May, not in April. But now, since it was bought in 1st April, it started to operate during the month of April, which is, we count April, it gives us 3 months, April, May, June 2021. So this amount, we need the depreciation. We say this amount times three months divided by 12. You get your 600. The 600 that we get, you times it by 15, because equipment is calculated at the straight line method, which is 15%. 15%. The amount that you get times 15%, you get your 90 rand. This is the depreciation for the new equipment. This is the depreciation for our vehicle. This is the depreciation for our old equipment. And then this is our depreciation for the new equipment. Then we have depreciation. We have depreciation, open bracket, 8,870, 8,870, you plus 90 rand that we got from our new equipment, plus our old equipment depreciation, which is 4,320, plus 4,320. You close your bracket, and then you add them all, you get your 13,280 total of depreciation, guys. This is total of your depreciation. And then we are done with our adjustment number 7. Adjustment number 8 says interest on the loan, it's still outstanding. And then now we have our financial cost. If they ask it like this, it's very easy. Loan, here's a loan, Capitec Bank, 18% per annum, 21,600. So you will say interest on loan, still outstanding. That means we need to pay outstanding. We still have some outstanding months that we haven't paid. So you can just say 21,600. It's 21,600 times 18%. This simple means that we took 21,600, and then our interest on the loan that we took, it's 18% for the whole year. So we calculate how much we should pay. Our interest is 3,888 that we need to pay for the whole year. And then interest on loan, we have already paid 2,880. 2,880. 3,888 minus 2,880, you will get your difference. The difference, which is 1,008 rand. 1,008. So this amount plus the outstanding interest that we still need to pay, it gives us the total amount that we must pay. This is how you do it, guys. Add all your expenses. Net profit or loss is equals to gross income minus other expenses. And then, guys, we get our net loss of 4,405 rand. If you guys have a memo, import duties from our cost of sales, import duties, they said is 984, which is in our trial balance is given as 948, not 984. And then also we have discount received. Discount received from our income, discount received, it's 585 from our trial balance, but in the memo they said is 686, which is incorrect. They made a mistake. We don't know where that money comes from. And also our expenses, everything is correct, but then they also calculated the interest loan, interest on loan, which is, it was correct, but it was never included in our total expenses. Hence they have their different loss. They have their different net loss. This is how our income statement must be according to the adjustment we got and also our trial balance, guys. We get the loss of 4,405 rand. That's it for the day. Feel free to comment and ask anything under income statement.